founder of the highest paid part-time job in the world, also known as Diamond Dave. And we're going to talk about why Snowflake stock was a perfect six-figure short opportunity. And what I'm doing right now in this video is I'm giving you a kind of like a preview or a insider's view of the kind of content that I'm creating for the IPO lockout course. So I'm going to kind of give you like a short video of what I'm going to create for that course, because what I'm currently doing right now is adding more content to that particular course because we're getting ready to make the price go higher. A lot of people that came in on the first run got in at the basement price, right? They got in on the ground floor price. That price is going to only go higher and higher because as I break this play down, it really made me going through this play and me making money on this play. And I didn't have any bad trades on this play except the time in which I did not leave when I should have left. But all of my analysis of this play was 100% correct. This was a play to where I could have made somebody with six figures, a millionaire. I could have made somebody with a few, I would say double-digit $1,000. I could have made them a six-figure person. That's how powerful this play was. And I saw it coming a mile away. And people that were following me on Facebook before I really moved to YouTube kind of hard would tell you that I was talking about Snowflake on Facebook on a regular basis. And all I was talking about was playing the downside of this particular company because I saw this coming a mile away. It took me looking at this play and me playing it to really realize that I can really make people very, very successful in the market based on my perspective of the market, the edge that I've created in the market, and then my ability to communicate that to people in a way in which they can understand it. OK, so as a result, we're only going to take this particular content and make it more expensive because of the value in it, because a lot of people have a game plan to really make six figures or even millions of dollars. And they got it for $197. And they just have to take it and apply it and understand how to position themselves. And we're going to kind of show you the power of it by breaking this thing down. But like I said, this is only going to be a preview because I'm going to give the total and the full breakdown inside the IPO lockout course, or lockup course. I'm sorry, but let's go ahead and get into it. So we're looking at Snowflake. Now we're looking at the 1 year chart and the interval is over 1 day candles. So let's do 1 day candles. Let me change this real quick. It's 1 day candles. OK, let me see. Do I want to change it to bars? I keep it regular candles. Let's just keep it regular candles. OK, we'll just keep it regular candles. What I want you to look at is the 1 year. And really what you're almost looking at is almost like a mountaintop where you're seeing this thing go up and then go right back down. And if we're looking at the close on Friday, closed around 220, is really close to the open, which where that close was 253. So we're seeing is at on 3/19/2021, they're almost where they started out on IPO. I want you to understand that. OK, now Snow, and we're looking at the ticker for Snow. So the ticker is SNOWY. I got it zoomed out. So some of the stuff's going to be cut out. But I really want you to look at this chart because I'm going to really break this chart down for you. They're a software company. They provide software solutions. They IPO'd around 916. I think a lot of people that got in initially got in way cheaper than the IPO price. And then what we saw was that once they IPO'd, they IPO'd at a really decent price. And then immediately, I want to say around 11/16, which is probably about 2 months later, they started to really shoot up. Now, the thing about Snow was very interesting. They IPO with a really, really small float. Their float was around 25, maybe 30 million shares. But I heard through the grapevine that they were only trading maybe 17, maybe 18 million shares are actually being traded. So you have a really relatively small float. So now once any demand gets put on a float that small, right, it really started to drive this share price up. And what happened is it became kind of like a fear of missing out, follow the leader effect. When people started to see that this company that Warren Buffett is supposedly attached to started to really move up, a lot of people tried to get in. And because the float was so small, what did it do? It kept moving this price up. So Snow at one time was trading at almost $400. Now, this is a company that IPO'd around, it opened at 245, right? And then let's say almost literally 3-4 months later, it was trading at around almost $400. So that's a big, big move. Some companies don't move that fast in 3 years. That's a massive movement. However, when I started to read and understand what was going on with this company, and I knew how to find the right information about this company, I knew they IPO'd. I understand the lockup situation. I understand how to leverage that. I knew based on once I started to get the right information and I understood what that meant, that this was going to be a really, really perfect short opportunity. And the way I short, I do it with put contracts. I'm not a big margin guy, so I don't necessarily borrow shares, but I do it using put contracts. And they're just as powerful because of options, they create a massive amount of leverage. So therefore, if you really want to understand how you can utilize some of this into your trading, I want you to continue to watch this video because I'm going to kind of break this down. What made Snow so powerful and made this opportunity such a big opportunity. And to me, what made this literally, I got this as a 6-figure play, but this could have been $1 million play, because what I want you to see is that you look at this right here, this closed at 390. Ever since then, it's done nothing but sell off. This has done nothing but sell off from 390. So 390 was at 12/8/2020. 4 months later, we're back really lower than the IPO price. I want you to understand that. From 12/8/2020, around 4 months later, we're lower than the IPO price. And one of the reasons is that Snow had 3 lockup situations. It had one in December, it had one in January, and it had another one in March. And what has happened is that as this float started to expand, it sold off more and more. Because the only reason this thing shot up like this is because you were dealing with demand on a really, really small float. Also, you can't get enough shares to short it because you can't borrow shares because there's no shares to borrow because the shares don't exist. As this float started to expand and a lot of people started to realize once they started hitting earnings and that they're trading at a multiple that's way greater than their earnings and they're not Tesla, it became unacceptable. It couldn't justify these price points. So because I understood what was going on with this, I was able to I had nothing but positive trades on this, right? And I had a positive trade on the one that I mistraded it, but I didn't manage that trade properly. And I wasn't able to monetize it as much as I could have if I would have managed it properly. But I had nothing but positive trades on that. And I posted some of those on my Instagram, and also some of those are posted on my Facebook, and some are also posted on my YouTube page. So you can actually see the documentation of the trades I made on this. It just sold off. So we're looking at the December 15th date. So we're looking at this right here on 12/8/2020. It closed at 390, right? On 12/9, you got a red day, but it's closing lower. And as we're approaching December 15th, what are we doing? It's only selling off. They got another lockup date at January, right? See another lockup date at January, right? So here is January was the 7th lockup date. But what did it do from 12/22? It sold off. March 5th, we got the same scenario. We're going to March 5th. Here's March 5th here. So that's March 5th, this red bar. But what did it do from 210 approaching March 5th? Got a little bit of horizontal trading here, but from 210 approaching March 5th, what did it do? It just sold off. This was a perfect scenario if you understood how to play it. This was set up to make people millionaires. Once this thing got to 380, if this would have traded around 200, it would not have been as powerful as a play. If this would have stayed around 300, it would not have been as powerful as a play. But the reason when this thing shot up to almost $400 with a small float, because like I said, it shot up to 300 before the float expanded. When this thing shot up to 400 with a small float, if I would have had the capital, I would have bought put contracts on this on 12/8/2020 to expire in March. And I just would have watched this thing just ride down. And that's exactly what it's done. Now, I was still able to get put contracts on this because what I did was I just couldn't buy the expiration date. One thing about being a bear, time a lot of times is always your friend. When you're a bear, when you're bearish on something, a lot of times time is your friend, and you just got to figure out, how can I buy time? Can I sit in my short position long enough, or can I buy enough time on my put contracts? But when this thing got to 400, it created a perfect scenario for people to make a lot of money on the downside of this play. And as we've seen, all it's done since then is sell off. So I want you to understand is that these plays exist in the market all the time, especially in this era that we're going into right now. A lot of people believe that this market is really getting ready to sell off really hard. So then a lot of these software companies, right, that don't pay a dividend, they're very, very overvalued. You're going to see the air taken out of them. Combining with a lot of situations that are going on internal to the company, it's going to put a lot of pressure on a lot of these stocks. And we've seen that with a lot of these. I mean, even Apple's having challenges right now. So the companies that are a lot less credible, a lot of these EV startups, a lot of these software startups, you're going to see a lot of the value shaved off these companies. And you can learn how to take advantage of that, because not only you're going to have conditions in the market, but you're also going to have conditions internal to the company. So this would have been a good play even without these yield issues that we have currently going on in the market right now. But you combine this with these yield issues and you're just getting these massive red days. I mean, you're getting 4 and 5 days of just massive selling off. And if you look at this, it's had, ever since it hit this peak, it's had more red days than green days because it couldn't support the price point. And then, like I said, on top of what's going on in the market with these yields and things of that nature, it's going to continue to put pressure on this. I think this thing is already under its IPO price. I think this thing falls well under 200 and may start to trade around the 150s. You understand me? You can find out, you can learn, you can take advantage of these plays. However, you got to get into one of my courses. Now, if you don't have experience trading options, I would encourage you to take the highest paid part-time job in the world, get your fundamentals down, because I was able to identify this kind of situation because I understood the fundamentals. Nobody taught this to me, right? I created this particular process of this strategy and the way to analyze this situation just off what I learned about the markets and how I understood how macroeconomic conditions affect microeconomic conditions, and then, you know, what's going on with certain things with the Federal Reserve. And I understood how to bring that together to create an edge in the market. So if you're not really savvy playing options, in my opinion, you should take the fundamental course, because once you get the understanding, you can create your own situation just like what I've done. If you already have experience playing options, I would encourage you to move forward in purchasing this course, because like I said, is that what the initial people that bought this course, if you would have taken advantage of what was going on in this company, it would have multiplied in profit what you paid for the course. And then once you understand how to do it, you continue to make money out of it. You don't need me anymore. So the course is is priced well underneath its value. And I've had several people tell me that. So the price will go up, because if I'm teaching you how to make tens of thousands or hundreds of thousands or even millions of dollars in the market, I shouldn't be charged $197. And the fact that it costs $197 is creating a disbelief in people that actually know how to trade, because they're saying this guy can't be really teaching me something valuable for $197. So there's a disconnect between the people that really understand how to take advantage of this type of information and the price point. So we got to change that. So I want to encourage you, get in on this, move forward on it as soon as possible, because as we start to move this price up and you get priced out, you're going to regret the fact that you didn't do it, because there's very few people on YouTube that are actually showing you this type of information. Right. And we're not doing it from an entertainment standpoint. You're on this video to make money. So I don't want to ramble. This is going to be the preview for the YouTube group, the YouTube following. And then what I'm going to do is I'm going to make a more in-depth course where I'm going to really break this down for the people that actually bought the IPO from a case study standpoint. And we're going to kind of break this down, how this took place, and then how you can use this as a template and apply this to other situations. So if you got value from it, like, share, subscribe. If you know somebody else can get value from it, share it out. This is David W. Williams, also known as Diamond Dave. I'll talk to you later.